Hello and welcome to an episode of Casual Friday. I'm here with the Duck. As always, the show is brought to you by Kraken Pro. Their Zero Taker, Zero Maker promo is still going on Kraken Pro for Euros who are now being prosecuted and kicked out of non-compliant exchanges. This is what Donald's tax dollars went towards before he fled to New Zealand as a result of a tax scandal, as we established in the last episode. I'm sure you all appreciate the consistency between episodes of why Donald fled to New Zealand. So stay tuned for the next explanation. But this is genuinely one of those cool offers, especially if you're looking for a home as a Euro. And just in general, if you want to support the show, you can do so via the link in the description. And especially for Euros, up to 10 mil volume, zero fee perp trading, you can actually do a lot of damage with that. So go check it out, and hopefully you like the platform as a whole. If you don't, let us know in the comments, and we'll try to make it better, or at least complain to the right people. We'll try to keep this one a bit brief, because this is the show that is never recorded on Friday, even though it has Friday in the name. And also Don is on zero sleep. You know, it's all that anxiety about the tax authorities. Or as he claims, it's because his small children didn't sleep properly. But I'll let you decide what the reality is there. You were tweeting a little bit, Don, some influencer style eye emoji tweets. So TLDR is that Saylor sold more, Trump bombed more, and BTC is roughly the same price. Was that roughly the theme you were getting towards with, hey, more bad news has come out, more selling, and yet here we are above 60K? Or was your cryptic nature hinting at something else?
The cryptic nature was me trying to figure out what the sentiment was like, which is usually the case if it's not a clear up and down post. But yeah, I mean, it is good news that bad news didn't take price down. Now, obviously, like we've had a little bit of bad news come in the last couple, like in the last day or so, with the war in Iran resuming. And that has taken price lower, but not as low as it could have. But yeah, the Sailor stuff is pretty much like that's really nice, like that we're not moving lower, even though Sailor's starting to sell. I think people are just tired of his whole influence. And the more he gets out, the less risky people assume Bitcoin is. Now, obviously, he didn't sell too much, but yeah, it's at least a good first step of getting Saylor to relinquish some control over Bitcoin.
Yeah, and then at the same time, I'm sure you saw this tweet. Strategy was sort of positioning itself as an active strategy type of company. I mean, I read that as
Yeah.
trading firm
I
essentially.
mean, yeah, it is essentially that. Like this, so like it's giving your trading keys to the most retarded people on the block. It's like, what do you mean? You've bought every single top in Bitcoin history, to the like legit the top where you would have to really try
Oh
to
yeah, it's
get
like
it.
mythical levels of poor execution. Like it was
Yeah, and
impressive in its own ways. Like how did you get that much size at that price?
exactly. And now they want to do the same thing in reverse, as in like dump the bottom, sell the tops, and that's the micro strategy. Very impressive. So that's gonna be like if they actually do a bunch of that, I think that's gonna be quite a quick unwind, just because of how bad they seem to be at this. Um, but yeah, we'll see if they do it again. I would like to see some more sells, um, but for that, Bitcoin price probably would have to stay low. So we're in this weird situation where Bitcoin going sideways or going lower would probably lead to more Bitcoin selling, which is the worst situation to be in for an asset, right? Like it's a flywheel in reverse. But also people seem to be quite happy with them just getting out, which has held price up. So we'll see. That's going to be a really interesting one to just keep track of. Like the more Sailor sells, the more sell pressure we have, but also people feel more confident getting back into the market, because one, it's kind of like a bottom signal. The guy that's always been buying every top is now selling. Like that's historically been quite a nice bottom signal. And then also just generally, like, we have to deal with less of Saylor, which is, I think, bullish for everyone.
Yeah, it's kind of a pulling at both ends type of thing, right? Like he's gonna sell, which means the cloud is lifted. Then you're like, oh wait, he's gonna sell.
Yep.
So it's more about how much willingness is there to absorb that, and also at what price. The transformation has been quite incredible, though, from a there is no second best, sell your kidney, mortgage your house, to hey, we're like active capital management strategy stuff now. And we have to balance our Bitcoin holdings, our dollar reserves, the MicroStrategy stockholders, who I think are just going to get perpetually fisted. And then the stretch dividend holders and the rest of the empire as well. It's not a particularly enviable position. I mean, I always thought I am stupid, but I thought it was especially stupid post ETF being like, why do you need a company that holds BTC? This isn't a grayscale anymore. We have like some of the most successful ETFs in US history specifically for this, which are like very well regulated and access isn't as much of an issue. But then that's when you kind of had to carve out a new value proposition where, okay, holding isn't enough because you can just do that via an ETF. So now I have to offer dividends and credit and, volatility-based strategies and whatever else. And you've seen this meme that every week he comes up with this like new metric, which leads to a bar chart, which makes MicroStrategy look really good. And it's like, oh, dude, come on. But on the TA side, we're basically at the same price as last show. Like the monthly hasn't changed, obviously, and we're a week in there. The weekly is still struggling at that cope-oriented nearest broken support turn to resistance at sort of 63, 64K. We basically closed at the level, and then we got some more news. The war escalation again, and we dumped down a little bit, but that's kind of where we're stuck. But it's not making new lows, which is nice. But the big picture hasn't changed in, I think, over a month at this point, which isn't terrible in itself because we've had quite a stir in that time period. So the kind of 60K volatility compression is not a bad setup, big picture, if it holds.
Yeah, I agree. I mean, generally, like if you would have told me 2 months or 3 months ago that we're gonna restart the war and have Saylor sell, and like what was the monthly candle gonna look like, you wouldn't necessarily think it would look like what it is right now. But yeah, it obviously could be better, given prices are quite depressed, but it also could be so much worse. I don't even know if that's a good thing or a bad thing. Like ripping the band-aid off and just nuking it to 45, like that'd be quite nice. But also then people would die on the way there. So, or if it's like just like, oh yeah, sideways is best. For me personally, and this is like a very personal thing, like the more sideways we go and the more Saylor sells, and this is like a time-based thing, probably the better for the long-term success, because he's always gonna find a way to blow up in my eyes. So if he gets away with what he's been doing this cycle, he's gonna do worse next cycle, and he's gonna be even bigger at it. So that's kind of like for the longer term health, that's probably my preferred option, just going a bunch of sideways. For my trader brain, that's like the worst option because there's zero to trade if that is the case. So yeah, it's all over the place right now.
I believe that. I'm in a similar boat where the volatility drift is like sort of net nicer, but I'm also so much worse at trading it. And I need all the help I can get, I think what happens is I get bored / distracted, and then by the time volatility comes back, I'm like too detached / coping, being like, oh well, it's been going sideways for so long. We'll see if what it does at the range high, and then it breaks it, and I'm like, oh well, it's been going sideways for so long. We'll see if it holds, and then it doubles, and I'm like, oh well, it's so far away from the base that I can't buy it. And it just turns into a cope fest. Whereas at least if it dies and it accelerates, I'm more than happy to buy it way too early and die with it and suffer the drawdown. But that does map to what we spoke about a few weeks ago, where it's like, the aggressive reclaim version of this playing out, the volatility drift version, or the band-aid rip version. It just really seems like we're still stuck choosing which one it's going to be. And you're right that there are different preferences here between investors and traders and volatility appetite, so on and so forth. But That's BTC. And volatility has been compressing, and even on the daily, we're just in a bit of a choppy range at the moment. Speaking of choppy range, I clicked on ETH just out of habit. I mean, that kind of traded up to its daily range high and pulled back. There's no crazy developments since we spoke there. One that's worth catching up on is Solana, actually.
Hmm.
Because so last week we sort of spoke about this daily slash weekly inflection point being like, if you want to be aggressive, daily above 78 is the one. But if you want to be slightly more careful, there's a weekly level sitting on top of it at whatever it was, like 81, I think. And
Yeah.
thus far, 81 is winning that fight. The daily reclaim trade, at least if you take it from the candle body and depending on exactly how you draw your range low, that's like slightly underwater. And it's also one of those weak breakout immediate pullbacks I know you especially hate. And then on the weekly
Yeah.
time frame, it's essentially closed at resistance and is pulling back now. So are there any updates on Solana here? Like, how do you reconcile? Well, I mean, I guess there's technically no reconciliation because the weekly is a retested resistance and the daily's falling below. But how do you
Yeah.
juggle these two time frames given how it's evolving at the moment?
Yeah, I think generally, like for me, like higher time frame always reigns supreme. So in this case, like it is for now a bearish retest. But like if you're very bullishly inclined and you think this whole like war restarting FUD is gonna kind of like ease up again, given Trump likes to just say a lot of things, but then chickens out the moment like any consequences are felt. Um, I think like it's somewhere in an area right now that would be the retest of the breakout. As in like we broke out above 77.5, 77.6, back into the old daily range, and we're now kind of trading back towards that. Um, like a little bit below it, but not significantly. So if you're super bullishly inclined and you've been waiting for an entry, like that's a very aggressive one. But it comes off of weakness, right? So you have like a very bearish trend and you have some weakness come in. But I think it's not the worst of the worst. So like there's an entry there with like a tight invalidation. It's just most of the time you're probably getting stopped out on that. But yeah, your invalidation is somewhere in the low 70s, entry here, and then your target would be above 100, which I
Yeah.
think is not the worst trade. It's just you look at the weekly time frame, and technically you're taking a trade into a bearish retest in a very bearish trend, which makes the likelihood of your trade playing out quite low. But it's not a bad trade, I think. It's just the environment we're dealing with right now. High time frame very bearish, and then low time frame you take what you can get. And right
Yeah.
now that's that's a retest, but it, like you said, it really shouldn't have retested. But given the validation is so close, it's still not a bad trade.
Yeah, I think the daily is you'd essentially be calling bullshit on the weekly, saying this is just a pullback, but the daily is in the driver's seat as far as there's a break in structure from the consolidation at 70s, a bit of a deep pullback because the rest of the market pulled back. Fuck it, send it, etc.
Yeah,
And it's just then a matter of how bullish are you and what is your risk and volatility appetite. Like, are you willing to stand in front of the high time frame for a better entry or not? Essentially, and as always, there's no free lunch, right? You wait for the weekly, you're probably going to be late slash get a worse entry, but get a bit more safety. And if you prefer the daily, you get a better entry, but also slightly lower odds given the high time frame is against you. And that's the no free lunch articulation of that.
yeah.
Have any other altcoins caught your eye? I do have our favorite scanner, screener, scammer, whatever you want to call it, up here, and people are surprisingly receptive to this AI slop. I think it's because it's just a nice little overview. And I did confirm that I'm not completely incompetent. When it uses month, it's last 30 days, and week is last 7 days trailing.
Oh, that's
Thank
nice. Yeah,
God, that would be a very juvenile pedestrian mistake to make in research, and I know that because I've done it before, like that exact pattern. The ones that are coming up as strongest right now are Morpho, Hype, Zcash, Uni, Solana, and XMR. Interestingly, two privacy coins there. Morpho is up, I think, because of the Robinhood chain, right? They're the ones they're the sort of DeFi mullet on that one, and it's up. But if you look at the weekly chart on USD, this sort of feels like a DeFi price action pattern. Do you know what I mean? Just this like very painful chop. It just starts reminding me of like the Degen Spartan portfolio of like Lido and everything else. That's sort of what that feels like. I don't know if you have a different view, but this wouldn't stand out, at least on my watch list from a technical perspective, Morpho in particular. Yeah.
Yeah, I mean it's stronger than most other things. I kind of feel like every time the market has shown some strength, the DeFi stuff's been outperforming. I don't know if I'm just imagining that. I don't really have any exposure to it, but every time I look at stuff in the DeFi space, when the market is up, it seems to be up the most. It's just also when the market goes down, it's down the most. But that's interesting to be trading. And then like the second sector that you've mentioned is privacy, where you've also have a little bit more motion than elsewhere, which is like a good indicator of where the eyes are this bear market, right? Like you have a bunch of stuff that doesn't really do much, and then you have privacy, and sometimes when the market goes up, you have DeFi, and then obviously the very obvious outlier being Hype and Lit, right? Like Lighter, that have been just strong no matter what. To me, at least, and I don't know. Like I'm not trading any of it. I just wanna nail Bitcoin this time around, and like a few others, but so far that's not really been giving too much. And once I see that turn around, I'll be more active in the sectors that I've just mentioned, just because I think they're still gonna outperform when the market turns around.
Yeah. You do get those types of breadcrumbs, right? Even in shitty conditions, as to the four people who are left trading. What are they buying, and where's the bid? Helpfully, the screener does show beyond the top 30: Lighter, Aero, Dex E, Jupiter, like ETHFi, Aave, Pen. Like it's all DeFi basically. So you know you're not hallucinating. And if you look at Lighter, that chart is very impressive, and already fights are emerging, as you can imagine, between the Hype fans and the Lighter fans on the back of this recent outperformance. I understand the appeal of that, but it's also just net good that we live in a world where there's some useful competition in the DEX space, and like products with product market fit that people actually use. That's nice. We're not used to that. So I welcome that. And then Jupiter, let me see. Where are you? Yeah, I mean, that's more of a... It kind of slowed down the dump type of pattern and has started basing a little bit. This is like one of those baby pips market regime type of charts, right? Where it goes from trending and then starts to base out a little bit. That doesn't look bad in comparison, like at least high time frame. What else was on here? Aero, I'm pretty sure that's a DeFi thing. Yeah, that's a very, like, a lot of these have basically spent the last couple of, like, sort of bottomed towards the first quarter of the year and have been basing since then. And I think in these type, ordinarily you'd be like, oh, well, it just dumped a shitload and went sideways. Why on earth would I be excited about that? And I think that's very reasonable. But in these conditions, I think it makes it a bit more interesting, because if you look around you, a lot of these altcoins, I mean, by weight, the vast majority of these altcoins, there's no base to speak of. They're just going down. So the ones that are even going down less or going sideways in shit enough conditions, that's a sign of strength that's worth paying attention to. It's all contextual, right? Like in a bull market, you're like, oh, everything is up 20%, this thing is up 5%. What an underperforming piece of shit. I'm never touching it with a barge pole. Whereas if market conditions are terrible, you're like, hey, this dumped less than everything else. That's interesting. It all depends on what the wider market is doing. I think that's the appropriate lens to apply to these things. It's all relative, bro.
Yeah, but it really is. Like it makes such a big difference, and it's all market dependent. So you get a little bit of like a monthly, like 2 months, 3 months, 4 months outperformance, and then the market turns around, and everyone knows where to go. Like this is just like how it works, right? Like when the market turns, everyone's just buying whatever's been strong. Doesn't even have to be good. It helps when it's good, but that's kind of like just how crypto works, because people don't know what to buy, and then everyone's going to look at the same thing and be like, oh yeah, that's been good, so that should like, obviously there's a bunch of idiots that are like, oh, this is down the most, so I'm going to buy that one. Like that works. Like the most stupid shit. Like people are like, oh yeah, my meme that I used to hold is down 99.5%. If I buy that and it goes back to all-time high, I'll make so much money. And funnily enough, like that oftentimes works for at least a couple of days, because there's other people that are just as stupid as you are, before it goes back down. But then there's also stuff that's just been outperforming, and that still has the eyes on it, and people are still active in that market, and then they just slam it and the market is strong, and then you have longer outperformance during an early bull market, and that usually is really good. So that's why we keep talking about it. Like when you have like bear market outperformance, that can lead to quite explosive rallies during an emergent bull market, which we're not seeing much of yet, but it pays to have like at least a little bit an eye on what's going on in the market.
Yes, with the usual proviso of you also can't over-index on that, because when conditions change sufficiently, sometimes the best performer of that cycle just sort of emerges once the conditions are good, even if it wasn't on your watch list when conditions were bad. So it's this very dynamic. That's why I think relative strength and relative weakness is, I mean, it's certainly the cornerstone of this screener, but also why it's such a useful proxy, because it always gives you sort of definitionally the most up-to-date information on the market. Now, you're not going to be the gem catcher, I'm super early to this narrative, like 3 epochs ahead, before anyone else saw it. But in terms of lining up with the market as it is, the relative strength and relative weakness is honestly an amazing way to do it. And it makes it very hard to ignore stuff that's consistently strong or consistently weak and those types of signals. Like your watch list can quite easily be out of date. Whereas if you have some sort of tool that gives you a view of a more agnostic view of the market just based on price performance or whatever else, that can help uncover some blind spots. And it almost sounds like an ad for this tool. To be clear, we're not going to sell it. I mean, this is just this is like 1 hour of Claude slop. You guys can do it yourselves. There's no monetization here, but it's. I just want to talk about some of the mechanisms that go into a watch list that at least I find helpful. Another one that came up there was Aave, part of the DeFi trend, as you can imagine. That one is a bit more tricky. You can sort of see where the last 30 days outperformance is coming from. It's literally those pretty much one green candle on the weekly that pushed us up, and that's where you sort of have to bring in other views, such as where it is relative to its high. So it's, beating Bitcoin this month, and then there's a point here that it's trading 77% below its 1 year high. So then that's always kind of a balancing job you have to do in terms of, okay, it's strong, but strong in what context? There's the market context, and then there's this sort of asset history context as well. That used to be a lot easier to do, to be fair, because all-time highs were sort of predictable acceleration gates where you're like, oh, well, there are no sellers left, or like every holder is in profit, absolutely send it. Over the last couple of years, that's just become less true in crypto, and a lot of these all-time highs are being used for profit taking, as we've discussed on the show, which is quite sad, but still a helpful cut. And then your favorite watch list in terms of stuff that's been picking up speed, over the last 1-3 weeks. It's BCH and ADA. So how's that for a remembrance act?
Yeah. It's just what the market is, huh? I mean, BCH, I get the whole narrative, but yeah, I mean, it's just BCH, right? But the narrative of not having Saylor is quite attractive, I think. And then 88 just dumped a bunch, but yeah, those are like I'll leave them.
Yeah, that's
Leave
basically
them to
retraced
others.
as well on the ADA
Yeah.
side, at least most of the impulse. So that is what it is. Most of the other stuff, like Pump, is one that's been talked about a little bit because Ansem is the new CEO. I mean, he isn't, right? But like a lot of the narrative around it is that, well, they didn't do a good job of airdropping, so I'll do it myself. This is one of those interesting, like, revenue. Like, you remember RLB was a
Yeah,
similar thing?
I was literally about to make the exact same
Yeah.
comparison. The same kind of like scamminess attracted to both too, like attached to both too, where it's like I don't trust these people. You know what I
Well, I
mean?
think the jarring part is like you sort of read the announcements and it's like, oh, all these burns and all these buybacks and this is so deflationary and there's so much like passive demand and stuff. But then you look at the price chart and it becomes like irreconcilable compared to what you're reading. And Pump is the same way. Like the entire way down, the whole thing has been like, oh, but they're making this much revenue, this much revenue, this much revenue. They're burning this, burning that. But then the market just doesn't care. And this is like pure speculation, but at least some of the commentary online has been that, well, it doesn't really matter if you're dumping, essentially dumping on the side, right? Through getting rid of the supply through other means, other mechanisms, etc., that dwarfs whatever surface level buybacks, burn type incentives you have in place. So I still think this is a decent trench health proxy looking at the pump chart. Solana is arguably better. You can look at Ansem and so forth. But even Ansem got cannibal. I mean, this is a very great sentence to be saying when you're in your 30s. But Ansem got cannibalized by Cash Cat or something, right? That's the kind of the Robin Hood chain meme coin is Cash Cat, and there was like an inverse relationship between Ansem and Cash Cat, and the more I continue the sentence, the more I'm clearly just losing whatever marbles I had left after spending all of my 20s on crypto Twitter. But I just don't think the point there is I don't think there's enough evidence that sort of retail is back, so to speak. And those types of flows, we just mercilessly rotate from like one to the other, and you can't maintain two coins or keep a bid on both. That's generally indicative of that you're still more PvP than PvE, to use that type of language. And I still think that's very much the state of the trenches. Like you look at those coins, people immediately trying to like vamp and spin off and do their own thing, and then just overall price performance and Solana being a bit sluggish. I don't think this is, at this stage, the trench renaissance that a lot of people are, relying on to some extent. I think it's a bit early for that. I'm also, as I said in my tweet, I'm not sure I want the trenches to come back, to be honest.
I mean,
At
no one
least
should. Like that's
not
off.
in
Like
the not with how it ended, right? That was just a retail slaughterhouse, professional extractor factory, and
yeah, I
uh,
mean the only people that really wanted to come back are the people that like they all got fisted and like this time we can do it to other people. And it's like, yeah, that's a good motivation to have that come back, right? Like it's either people that max extracted and then are like, oh yeah, I would take some free cash again, or it's like all these victims that are just sitting there being like, oh, this time I can be the perpetrator. This time I can kill people. It's like, yeah, cool, like good space. I don't think anyone reasonable should want that
I
to
mean, you
come
can look
back.
at it empirically, right? Like, this is all on chain. You can see how many people made money versus lost it, and the distribution and the average hold time, etc. It was like unequivocally in the data one of the worst experiences for retail as a whole. And so you've got that pure economic data driven reality to contend with. But there is a kind of lottery mindset that comes with it. Like, oh, if you caught Trump early, if you did this, if, WIF ran to whatever valuation it ran to, if my auntie had bollocks, she'd be my uncle. Like it's those types of
Mhm.
arguments. You see someone else win on the slot machine next to you, and you're like, this game is great. Meanwhile, you're down 10 grand or whatever.
Yeah.
It does give off that type of vibe as well.
Yeah, I hate those arguments. I feel like people are just like people are first order thinking so much with meme coins. They're like, oh yeah, if you just sold the top, you would have made so much money. So this is great. It's like, yeah, that's not how it works. Someone else has to buy whatever you're selling. You probably didn't sell, and you probably wouldn't sell at the top anyway.
Yeah, you would have if you bought it, you would have sold the 1.5x and posted a paid Discord link on Twitter.
Yep.
Like that's the reality. It's the same with all the people like, oh, if only I heard about Bitcoin as early as you did. It's like you wouldn't have done shit. Like
Yeah.
you would have lost it or sold it to go fund a holiday or done something else. Like and the thing is, it's not just like there's a real downside to thinking in those terms because as you're aware, and we've discussed this too, it quickly turns into self-torment where you're like you sort of instead of focusing on the next trade or your process or your system, you just start kicking yourself over your phantom P&L, being like, oh, if only I held this, if only I sized up more, if only I did that. And you just live in the world of if only, where you just punish yourself for your past mistakes. And then you go on Twitter and all you see is like survivorship bias of people who maybe did, maybe didn't hold, and you're like, oh, well, this is the way to do it. You then try to apply that and end up getting doubly fisted. It's just a very negative rabbit hole / spiral to fall into. All this like mental P&L calculation, shadow boxing, if I did X and did Y and Z happen. I just think the entire genre as a whole is destructive and unproductive. You can probably take away like a few things with a good enough data set of like, oh, here's how my trades perform if I across different holding periods. You can run some like reasonably empirically grounded simulations to like get some data and move on with your life. But in most cases, these aren't like scientific views or endeavors. It's more like it's just punishing yourself for either your all-time high P&L or even one layer detached where your all-time high P&L would have been if you would have taken like 10 different actions. And I just don't like the whole practice personally, as someone who's also been there.
Yeah, it's quite stupid. I mean, there's a million ways. If I would have, like, you could have made infinite money in like hundreds different circumstances, but you wouldn't have. And that's just very, like, it's just like if you're gonna work on something, it's not like you should be working on the fact of why you wouldn't have, right? Because, like, I mean, there's been infinite opportunities around everyone. And then the question is like, why have I not capitalized on that? Rather than like than thinking, oh, like being stuck in the past and being like, yeah, I should have bought this, I should have done this. You should be wondering like, what's the reason for me not having done it? Like, what's the systematic kind of like fault in what I'm doing? If that is something that you want to be doing, right? Because I think also like it's totally fine not to want to live your life like that.
Yes, 100%.
But also like if you're already spending time like beating yourself up, like rather than doing that the entire time, just think about like, okay, like how can I change that I'm gonna be able to take advantage of the next opportunity that
Yeah,
I'm given.
exactly. Like, what would a system look like that gives me the necessary volatility, drawdown, and potentially low liquidity tolerance to take advantage of those opportunities? And what would that look
Yeah.
like in practice? And that's like a very reasonable, grounded investigation, as opposed to just pattern matching these specific examples. Be like, oh, if only I bought this, I would have done that. Like that. If you're going to be an adult about it, it can actually be quite productive. But most of the time, people just kick themselves over it, and that's a lot less productive. Also, in many cases, as you alluded to, the same mental illness that lets you hold like insane moves to ostensibly absurd market caps and huge P&L swings, that same mental illness is what leads you to round trip it in
Yep.
most cases. So it's like, do you want to play that game as a category? And I think no is also an acceptable answer. And it's like, you know what, I'll tolerate this, but not that. Like, I won't go beyond this liquidity or market cap or whatever other threshold, or I want this to be my maximum drawdown, I'm not comfortable with anything else. I think like building your system around that, like those types of parameters, like how much volatility can I stomach, how much drawdown can I stomach, what liquidity thresholds, given my risk appetite and portfolio, can I operate in? Those types of questions are really cool to ground you into building a system. And again, usual plug, you can just dump this into an LLM and start working through it. That's productive. Everything else is a bit it's an act of self-flagellation, to be honest.
Yeah. And then people feel good about doing that to themselves.
Yeah, it's just tuition, like, bro. I'm paying the market tuition.
It's like, nah, man, it's not helpful. And I generally think like that, like it's a little bit of a fool's game. Like that whole like the whole trenches stuff is like a very foolish game, because either you're, like you said, either you're gonna be mentally ill to hold long enough, but then you're gonna round trip, or you're not mentally ill too long to hold long enough, and then there's a good chance that you just get like just bleed out if you don't. And I think that's the story for 99.9% of the people. And it's not even, I'm not even sure which one is better, right? Like I've seen people be mentally ill enough to hold on to stuff, and then they're up like $1 million or 2 or 3 or 4, life-changing money for them, and then they don't sell, and then they're suicidal for the rest of their life because they had everything in the palm of their hand. And then there's other people that just like put in a bunch of money every week and then they lose it, and then they keep doing that for weeks and weeks and months at a time, and end up in the same place as the other guy ended up, which is just like I think it's not necessarily where you want to be. I think it's just not going to do you much good. And there's then that like that 0.000 something chance that you're neither of them, and that you're going to buy something and hold it long enough and then sell it and make it out. But that's very, very rare. So like it doesn't really make much sense to be like, hey, you should, like, maybe you are the 0.000 whatever percent guy that is gonna make it out alive out of that market. Like I think that'd be like pretty bad.
But to be fair, the useful part is every single person on your For You page on Twitter is that 0.00 whatever percent. So that can
not even like, and that's the problem, because like not even like they are also incentivized to pretend like they are that.
Yes, of course. There's a ton of LARPing and wallet stealing and straight up lying and perverse financial incentives, and you add survivorship bias on top of that. It's the worst sample ever. That's why I think it's actually really useful to look at, the Dune dashboards about like pump fun in the trenches. Like you look at your feed, and then you look at the economic reality, and like one of them is obviously bluffing, and it's not the on-chain data out of those two.
Yeah. Like, and the influencer stuff that you see online, right? Like even like the most of them are lying. Like that's just how it is. And the other side is the ones that actually actively take advantage of their following. Because if you're an influencer in crypto and you're trading a meme coin, the only thing that makes meme coins go up or down is like a bunch of people buying or selling, right? There's not really like informed buying or like there's not like, oh yeah, I have a thesis on this. Like this is gonna change the world because of XYZ. No, it's just like it's an attention-based economy entirely. So if you're like an influencer with a following, you're playing a rigged game already, right? Like it's so easy to be like, hey, this is like a good meme. This should be going up, and it goes up, but it only goes up because that person posted about it. So like most of these people are lying, and the ones that are not lying are usually taking advantage of the fact that they have the following, and that following they might have gotten by lying. So they started off lying, then they have like a bunch of influence, and they can push things up or down, and that's kind of where they get their edge from. It's just like it's a fucked up part of crypto that I think does no good to anyone.
It's fine. Cope. We're bringing it back, Don.
Yeah.
We just need a different celebrity. We don't need celebrity. We'll make our own celebrities this time, and it'll be fine. The final thing to touch on: SanDisk daily chart hit the cluster bottom. Is this the bottom, Don?
Okay, let me pull it up.
So that from high to low, that's like a 37% pullback. into something that looks like a daily cluster. Is this it? Are we so back?
I don't know, man. Like this thing has never pulled back. Like you go on the weekly time frame, it's never pulled back to support, and now we're
Hey,
back to
this
the
is
first
this
support.
this loosely resembles a support on the
Yeah,
weekly.
it does, which is scary. Like it's like, yeah, you should be like it's the first support that it's ever hit. So like
That's
that should
all I
be like
needed to hear. My
that's
future is
that.
in my leveraged future is in your hands now.
So that should be like oh yeah, it's at support. Like that's good, and it's never been at support. But then also, why is it at support? Like it's the first time it's shown so much
Listen,
weakness
it's
that it's
because these
actually been able to go
weak-handed
to support.
pussies are selling after being up 20,000% in 3 months or whatever it is. Okay, that's what's happening.
Yeah, like this market is hard, man. Like this is like the altcoin market when everything's gone parabolic and might go more parabolic. But it's like, yeah, it's support, and you can play this tight. It's only like there's only like a 20% risk or something that you have
Listen, in crypto
before you get
terms, we call that
invalidated.
a flesh wound. Okay, that's
Yeah,
nothing.
but I don't know. I just like I'm not a fan of buying stuff like that, and that's why I am. I mean, that's why my gains are modest and my losses are tiny. It's because I'm not playing these games.
Yeah, yeah.
Um, but yeah, like that one's like it's interesting because it's support, but also why is it at support? And if you're super bullish on that whole sector, I think that's a good spot. I'm not entirely. So I'm just gonna cope from the sidelines. If it goes up, I'm gonna be happy for the people that bought, and if it goes down,
If it goes
I'm like,
down, you owe me money is the outcome for that specific permutation. You also rugged me on SpaceX, the TradingView listing support, which is a technically crucial level.
I told you,
Hey,
don't buy it.
you listen, because you missed a huge move from 150 to 172, a 15% return at 1000x leverage, 0 DTE options plus perps. That's a retirement trade, and this is just a temporary excursion below it. And when it
Yeah.
gets reclaimed, we ride again, Don.
It's not even unlocked yet, man.
Fuck you. That doesn't mean anything. Nvidia put in a bit of a bounce from its
Yeah.
prior high rough retest level, but it's honestly a bit of a mixed bag as far as like the AI trade, memory, etc. Like memory, semis. If you look at indices as a whole, where is my S&P 500?
It's just going sideways.
It's just going sideways, isn't it? Yeah. So I mean, listen, we had one red day. That's like a disaster scenario compared to what people are used to. But it is consolidation in the
Yeah.
indices, and BTC still holding on, which is cool. It's different.
Barely holding on, but
Barely holding on, but at least it's not at 40K. That said, I think
yeah.
if a lot of these consolidations break, it will either take like a act of God defiance relative strength move, and I think that's where you shove, to be honest, unless you think it's like probably like you give it like a week or something. And then if it doesn't break 60K with indices breaking down, I think that's very shovable actually. But to be fair, if it follows suit, then you still shove just at a lower price. That's my plan at the very
Yeah.
least.
Yeah, I think generally like it's like I'll assume it's gonna go sideways. And if it does go sideways for the rest of the month, it's probably bearish. But I kind of look at the monthly. This is something that we talked about last show. And I'm like, we are at an area where we need to bounce. And if we cannot clear the cluster that we have from 61.6 to 56.9, we need to be above that towards the monthly close. If we don't, we're kind of screwed. So it's kind of like we're in that position where it needs to go up now in the next 3 weeks. So if you're bullish, I think it makes sense to gamble on that happening. But if it comes back to where it is right now, I think that's probably like not the best sign. Then I would assume just TA wise, and this is not like gut feeling, whatever. It's just like TA wise, I just don't think that'd be a good look if we close that.
Yeah.
like at resistance.
That's like the timer
Fairly
argument
bound.
from last
Yeah,
week,
from
right?
last
That,
week.
hey, we closed inside the upper boundary. And so if this month treats, especially given we've pushed above it already this month, right?
Yeah.
If we then close below the upper boundary, that just looks like a bearish retest of the upper boundary, which is
Yeah, so
scary.
we need some bullish action. It's not the best that we now have like the Iran war come back. So need a Trump tackle.
It de-escalate on Friday, the classic, into
Yeah,
the close.
if that escalates further and the markets go back to going down, we're like in a very precarious situation. Then we might get the washout that we've been talking about and been like the 45K washout if that intensifies. But yeah, that's the thing. That's the thing to watch. I think like just like the next 2 weeks are going to be quite important, and you want to see some upside. If that doesn't happen, and we go into the last week of the month, and we're still at 62, then this thing is in trouble, I think.
There you go. Very optimistic note to wrap up a shorter episode. I will say the useful framework takeaway, and as always, because of my AI psychosis, I'm like, you can just go talk to a smart model about this. But it's choosing what type of games you play and the corresponding trade offs. Like, do you want to play the low liquidity, high volatility, high drawdown tolerance game? You can say no, but you can also say yes. Or do you want to play the boomer, boring, top 50, top 100, low leverage type of game? And what does your risk profile and return profile look as a result? What do you give up? What do you gain? And there are trade-offs with all of that stuff. I think they're all defensible as long as you are very conscious in your decision and you know which game you're playing. And then you don't jump between them. That tends to be a big one too. So that's a useful one to take away. We'll also be back on Friday to talk more shit. And hopefully with some better price action to boot. Before you click off, make sure to like this video if you haven't already. Subscribe to the channel. If you want us to keep our jobs and to keep this show alive, no guilt trip, sign up to Kraken Pro by the link in the description and the pinned comment. We'll be very grateful. Especially if you're in the EU, there's a great offer with 0 fees on perps up to 10 mil volume. That's genuinely pretty good. So go check that out. And if you're a Mica refugee in Europe in general, Kraken's a good home for you. And it's a better home if you use the link in the description. I think that's all from us. A final housekeeping note is that we have chapters and timestamps now due to the power of AI TM. So we're clearly upskilling in our craft. Coming next are IRL streams with Don and also clips being posted by random people going for bounties. So we'll just be covering your feed in Don's content and clips and out of context absurdity, because that seems to be the only way to make content nowadays.
Yep.
Yeah, that'll be fun. That's all from us. Hope you all have a wonderful middle of your week, and I think we'll see you on Friday.
Bye bye.